So now let's continue and look at some more advanced stuff. And let's start with the chop filter. You can find this written down in the documentation. So if something's not clear, just go to the website, click on user guide, and it's all there. All right, but let's look at it in practice. So I just marked up the chart a little bit because I found some instances that we can use to demonstrate this concept of a chop filter. And as you can see, I circled the signals. And what we want, a foundation of our trading, is that we need a trending market. We don't want to be involved when there's no trend. So this sideways action is not something I'm really interested in. I would be much more interested in a situation where price moves. Now, the software will do its best to identify those areas, but as we said, nothing ever will be 100%. And there's certainly, and please always be aware of this, there is a no man's land here. There's a transition where, by definition of how the world works, we will get a couple of bad signals before any algorithm will sense that the trend is over. So let's look at the chop filter. We have certain signals, and now I'm going to switch on the chop filter. Watch this, and some signals will disappear. I don't know which one exactly. Well, one disappeared. 1, 2, 3, 4. Look at this. These would have been losing trades probably because it's a sideways market. So I hope you can see that the chop filter, while not perfect, because this one, for example, stayed there. But look at the other ones, 1, 2, 3, 4, 5. Maybe this one stayed too. Okay, so 5 of the 7 were filtered out. That's not bad. That's what the chop filter does. You can see the chop filter measures the sensitivity in ATRs as well. 0.5 simply means half an ATR. If I reduce this to 0.3, more signals would remain, you see? So if I set it to number, let's say 0.8, then it would filter out more. Feel free to experiment. 0.5, half an ATR is just a reasonable amount for me. Now, I also want to show you what is the ATR, what are we measuring? So the other foundational concept of the way we see the market is linear regression. That's a concept that should be firmly grasped and understood as we approach the market. So linear regression is basically the best and the shortest route between data points. The way we measure linear regression is this blue cloud, a measurement of linear regression, and the thicker the cloud, the stronger the momentum. And we're going to say that if this drops below 0.5, again, ATR, remember, so ATR changes as new candles come in. It's not tick, not dollars, not nothing. It's not something cemented forever. It is flexible. That's the thing. That's why the algorithm can always adjust itself to the current volatility conditions of the market, because every new tick, every new candle that comes in will modify the ATR 20. So everything is measured in real time. If the market changes, we change with it. Beautiful. So every time this distance drops below 0.5 or whatever you stipulate on that field that we looked at, any signals that would emerge will be filtered out, will be suppressed. They are filtered out because the algorithm calculated, and pretty correctly so, if you look at the chart, is that the market is flat. And that's not where we want to get involved. We want to wait till something emerges, some trend, some momentum emerges, and that's when signals will start to appear. It works. And I'm not picking an example. I could go back anywhere else. You would find the same stories all the time. Now, of course, you don't have to use it. You don't have to. If you switch it off, then basically all these signals will be calculated regardless of the existence or non-existence of momentum on the market at that point in time. Okay, so that was the chop filter.